Welcome to Talk Tickers. You're here for our deep dive into the latest earnings call. We cut through the noise to bring you the key insights.
That's right. No need to wade through the full transcript yourself. We'll hit the main numbers, look at what's driving things, key projects, management outlook.
And then we'll wrap with our, this is not financial advice bit, maybe spark an idea or two.
Exactly. So let's jump in.
Okay. The numbers, first quarter. What did we see?
All right. So operating earnings per share came in at 93 cents. Jeep results were 75 cents.
Okay, 93 cents operating. But you mentioned some tailwinds there.
Yeah, a few things helped that number. 3 cents from better than normal weather, which always helps utility earnings.
All right.
Then 2 cents from renewable natural gas, the 45Z income specifically, and another 2 cents from sales just coming in a bit stronger than expected.
Got it. So a few helpful items in Q1. What about the full year then? Are they sticking to the plan?
They are. They reaffirmed the full year 2025 operating EPS guidance, still $3.28 to $3.52.
And that range does include the RNG income.
It does, yes.
Right.
The midpoint stays at $3.40.
Okay. And any updates on financing, equity raises?
Yep. They mentioned about $1 billion of common equity sold under their ATM program. That's the at-the-market program.
Right. Drip feeding it in. What price?
Weighted average price was around $57 per share.
Mm-hmm.
And they also expect another roughly $200 million in equity issuance through the DRIP, the dividend reinvestment plan, by the end of the year.
So that lines up with what they told us before about 2025 equity needs.
Exactly. It keeps them right on track with their previous guidance. Management seemed pretty pleased with the start to the year, emphasizing, hitting their financial commitments consistently.
Good, good. Okay, let's talk about the big one. Coastal Virginia Offshore Wind, CVOW. Always a major focus. How's that progressing? Sounds like a massive project.
It really is. And they gave quite a detailed update. Overall, it's 55% complete now.
Over halfway.
Yeah. And still on schedule for that first electricity delivery in early 2026 with full completion by the end of next year.
Okay. What about the physical components, the bits and pieces?
Right. So get this. 100% of the transition pieces, those connect the foundation to the tower, have been rolled. 86% are welded.
Wow.
And half are fully complete, with 59 already installed out there. They expect the final one to be finished in October.
It's October, okay.
Yeah. And the monopiles, the foundations, over 80% complete and delivered.
Delivered, okay.
The rest should arrive in the next few weeks. They installed 78 last season, which is a good run.
Yeah, definitely.
And this season, which actually just started, today apparently they're aiming for about 25 installations per month. Weather permitting, of course.
25 a month, that's moving. And the substations, getting power back to shore.
First offshore substation was installed back in March. The other two are set for summer delivery and then installation in the fall.
Okay. Turbines themselves, Siemens Gaia.
Progressing well. They've got sections for 28 full towers complete, 45 more are in production. 36 nacelles, the main housing, are finished or waiting tests. And 28 blades have been cast. So, the whole supply chain seems to be moving.
Would like it. What about that special installation vessel, the Carib? Is it ready?
Almost. Expected to enter service and head to Virginia in the next 4 to 8 weeks. So just in time for the main turbine installation phase this summer.
Okay, so operationally, things seem on track. Costs, always the big question, especially with inflation and supply chains.
Right. So excluding tariffs, the project costs are still in line with what they told us last time.
That's good news.
Yeah. And that contingency fund still has $222 million left, about 6% of the remaining costs. So a decent buffer.
But you mentioned tariffs. That's the potential wrinkle, isn't it?
It is. It's definitely something they addressed. Actual tariff costs incurred through Q1 were only $4 million. Pretty small.
Okay.
But if the current tariffs stay in place through Q2, that could jump to $120 million.
Wow. Okay. Big difference.
And potentially $500 million by the time the project's fully in service at the end of 2026.
So $500 million potentially just from tariffs?
Potentially, yes.
Yeah.
Now, the company estimates their share that they'd likely bear is around $130 million of that total potential $500 million.
Okay. How does that work, the sharing?
It relates to a cost-sharing settlement they have.
What?
So based on that, they've actually increased the total project cost estimate now by about $120 million.
Right.
That's to account for the tariffs they've already paid and what they expect through Q2. They did book a small charge this quarter for some costs they don't think they'll get back from customers because of that sharing deal.
So the new total project cost is,
Updated number is $10.8 billion.
and what does that mean for, the average person paying their electric bill?
The estimate is it'll increase residential customer bills by an average of about 4 cents per month, spread over the whole life of the project.
4 cents a month. Okay.
And the updated levelized cost of energy, or LCOE, is $62 per megawatt hour. That includes the renewable energy certificates, the RECs.
Is $62 competitive?
They view it as competitive in today's market, yeah.
Okay. Let's shift gears a bit. Regulatory stuff. What's happening in Virginia? I heard about a rate review.
That's right. End of March, they filed their Virginia Biennial Review, standard process, highlighting reliability, affordability.
Mm-hmm.
But interestingly, they're asking for their first base rate increase since 1992.
Wow, since 92. That's a long time.
It is. They made a point of saying residential rate hikes over the last decade have been way below inflation.
Okay. And there was something about data centers in that filing too, wasn't there? That demand is just huge.
Absolutely central. They're proposing a whole new rate class just for high energy users. Think data centers.
How high are we talking?
The threshold is 25 megawatts or more demand, plus a high load factor, 75% plus at one site. That captures about 139 customers right now, and 131 of those are data centers.
So basically a data center rate. What's special about it?
Some new customer protections, or maybe utility protections, depending how you look at it. A 14-year contract commitment.
14 years. That's long.
It is. And minimum demand charges, too. 80% for transmission distribution costs, 60% for generation. Phased in over 4 years for new customers.
What's the goal there?
To make sure these huge users pay their full share of the costs, essentially. Protect other customers from, potential stranded costs if a big data center were to suddenly leave or cut back years down the road.
Did they talk to the data center companies about this?
Yeah, they said discussions were constructive while they were putting the proposal together.
Interesting. Okay. Any other big filings? New power plants?
Yes. Also in March, they filed for approval to build the Chesterfield Energy Reliability Center.
Okay, what is that?
It's a natural gas plant, roughly 1 gigawatt capacity. Expected cost is about $1.5 billion, aiming for service in 2029.
And that $1.5 billion, was that already in their plans?
It was. Included in their most recent capital forecast update, they confirmed the cost estimate still looks good.
All right. What about outside Virginia? South Carolina, Connecticut?
South Carolina, lawmakers are looking at energy legislation, things like future generation, permitting reform, how utilities recover investments. So stuff to watch there.
Mm-hmm.
Connecticut, the Millstone nuclear plant is running well, still provides like over 90% of the state's carbon-free electricity.
Still a workhorse.
Definitely. And 55% of its output is locked into a fixed price contract through late 2029. The rest is mostly hedged. So pretty de-risked.
Any news on extending Millstone's life or finding new buyers? There was talk about Rhode Island or even data centers needing nuclear power.
There's legislative interest in Rhode Island, for potential future nuclear procurements. Yeah. And the company said they are exploring options for Millstone, including potentially supporting data centers. But they're doing that with stakeholders. And no specific updates or actions announced on the call, just exploring.
Gotcha. And sticking with data centers, just confirming that demand is still red hot.
Absolutely. No slowdown cited. They talked about roughly 40 gigawatts of potential capacity in various stages of contracting across their service area.
40 gigawatts, that's enormous.
It is. And about 10 gigs of that is already under signed electric service agreements. Customers, mainly cloud and AI inference, want to move fast and are planning into the 2030s.
And no worries from them about the economy or anything, no pauses.
Management said they haven't heard any change in tone. No concerns expressed about broader uncertainty or project pauses from those customers. It's still full steam ahead, it seems.
Okay. There were a couple of other points. A sad one on safety.
Yes, they did acknowledge a tragic incident, the death of an employee.
Mm-hmm. They
reiterated safety is their number one core value, a somber moment for sure.
And an executive change, too.
Yeah, the executive VP and chief operating officer is retiring effective June 1st. They thanked her for 36 years of service. Significant contribution, clearly.
Okay. And lastly, just on sales trends, Q1 residential looked a bit soft.
It did appear that way in isolation for Q1, but looking at the last 12 months ending Q1, overall sales have been strong, actually trending slightly above their annual guidance.
Oh, interesting. What's driving that strength then?
Mostly the commercial segment, largely driven by, you guessed it, data centers.
Of course.
And the company said they don't expect that residential weakness from Q1 to continue.
Okay. So let's try and synthesize this. Big picture takeaways for someone tracking this company.
Well, first, reaffirming guidance, despite those Q1 tailwinds, shows, some underlying confidence, right? They feel they can manage the year.
Makes sense.
Second, CVOW progress is key. The detailed updates are helpful. But the tariff situation adds a layer of complexity and cost risk, even with the sharing mechanisms.
Yeah, need to watch that.
Third, the data center rate proposal in Virginia is really significant. It's proactive, trying to balance attracting that massive load growth with the protecting other customers and managing long-term risk with those 14-year contracts.
Yeah, that 14-year term is notable.
Definitely. Fourth, the data center demand itself just underscores how valuable their territory is right now. That's a major growth engine.
Mm-hmm.
And finally, keep an eye on that Virginia rate review and the Chesterfield gas plant approval process.
Mm-hmm.
Those will shape future earnings and their generation mix. Oh, and they also briefly mentioned potential transferability of tax credits for the offshore wind project and maybe using tax equity if policies change. Just more financial planning points.
Lots to track. Okay, time for our favorite segment. This is not financial advice.
Yeah.
Got any outrageous but plausible trade ideas based on this call?
Okay, here's one. Playing off that relentless data center demand and the proposed long-term contracts in Virginia.
All right.
What if you looked at a really specific play? Go long on a company, maybe a smaller REIT or infrastructure developer that specializes almost exclusively in building data center infrastructure right there in the Utilities Virginia service territory.
Hyper-focused.
Exactly. The thesis is, if those 14-year contracts become standard for data centers getting power, the companies providing the physical buildings and infrastructure in that specific hot zone could have incredibly stable, predictable, long-term revenue streams locked in. Maybe even more so than data center operators elsewhere.
So, betting on the location and the long contracts providing insulation?
Kind of. It's outrageous because it's so niche, depends heavily on regulatory outcomes in one state, and assumes demand stays concentrated there. Huge risks. Could go sideways if data centers suddenly prefer Ohio or if their rate structure changes. But plausible if that demand keeps funneling into Northern Virginia under those terms.
Interesting. Very specific. Got another one.
How about a pairs trade, maybe? Linked to CVOW and those tariff risks.
Okay.
Go along a U.S.-based supplier or logistics firm that's heavily involved in renewable projects, generally wind, solar components, installation support, but maybe less directly exposed to the specific tariffs hitting CVOW's imported monopiles or substations.
All right. Long domestic renewable supply chain.
And pair that by going short a shipping or international logistics company that seems particularly vulnerable to ongoing or maybe escalating global trade tensions and tariffs. Someone moving goods between, say, Asia and the U.S. frequently.
So betting on domestic renewable build-out continuing while hedging against or profiting from potential tariff pain impacting international trade flows.
Exactly. You're trying to capture the upside of the domestic energy transition, which CVOW is part of, while acknowledging the risks highlighted by those tariff numbers they discussed. Again, highly speculative, lots of moving parts, trade policies change fast. Definitely not advice.
Definitely not. Okay, two interesting, if indeed outrageous, ideas there.
Yeah.
That pretty much wraps up our deep dive for today. We hit the results, went deep on CVOW progress and costs, the regulatory scene, especially around data centers, and that continued demand surge.
Yeah, hopefully that gives you a clearer picture of the key moving parts from this call.
We hope so too. As always, remember, this is just our take. Do your own homework before making any investment decisions.
Absolutely.
Let us know what stood out to you, or if there's anything else you want us to dig into next time. Thanks for tuning in to Talk Tickers.